All right. Hey, everyone. Hope you guys are well. Welcome to another weekly Forex forecast for the week ending November 8th, 2024. Starting here with the DXY, not wasting any time. Before we get into today's analysis, keep in mind that next week we do have the U.S. presidential election on November 5th. So that is going to be a significant event for these markets. So expect a lot of volatility around that date. And that's going to matter for everything we talk about today. So just keep that in mind as we go through these charts. Now, with regard to the DXY here with the US dollar index, what we've talked about over the past couple of months is the fact that the DXY lost the bottom of this channel back here. Okay, so this goes all the way back to 2023, and you can see how we had some nice movement within this channel. The market lost it back here. We talked about the falling wedge back here, the squeeze into 102. This reclaim up here exposed 102.60. The reclaim above this exposed these higher levels. This was my final target. So we've talked about all of this over the past few weeks. This is not just kind of some kind of hindsight analysis here. We've talked about this step by step throughout this entire period. Now, looking at the DXY over the past couple of weeks, we've talked about 104 to 104.50. This is an area that goes back a couple of years. So we did expect a reaction, a bearish reaction from this area, which so far we've gotten. Now, the telling thing about today's price action, guys, and I know it's Friday, so you've got to take this with a grain of salt, but we had NFP come out. And although the unemployment number was unchanged, the jobs number was awful. It was incredibly low, yet we are seeing the dollar actually surge here, up, right now 0.4%, which is a pretty big move here for the DXY. So this, in my opinion, could be telling for next week, because anytime you get a market that defies what the consensus should be, fundamentally speaking, in other words, you get a terrible jobs number, and instead of the market selling off, you get the market rallying. That is a sign. That is a clue. That's a clue of a strong market. So right now, guys, what I'm looking for here next week with the U.S. presidential election, again, keep in mind, we are going to see a lot of volatility around that date, November 5th. But if the DXY can get above 104.50, this area back here, if it can get above here on the daily chart, then I think we're headed here toward these highs around 106 and potentially 106.50. All right, so that seems like the most likely scenario. Of course, while the market is below this area, though, you do have to keep in mind that the pullback scenario is still there. We could still get the market pulling back while it is below 104.5. All right, so keep that in mind. But, as I've said over the past couple of weeks, guys, this is why I have said time and time again every single day that I am not interested in shorting the US dollar because of how strong this move has been. I've said ever since we got the retest up here that any pullbacks could be shallow. And that's why instead of looking for shorts here on the US dollar, I've been looking for buys. And you can see here, so far a very shallow pullback if this is all we get. But again, as long as we're below 104.50, there is that potential for a deeper retracement into areas like 103.20. But like I said, right now with the market rallying on that, pretty awful jobs number today, I do think that is indicative of a very strong market, and it really just kind of supports what we've seen here from the DXY ever since the start of October. Next up, we have the EURUSD, which if you guys saw Thursday's video, this played out absolutely perfectly. And even before that, guys, if you've seen recent videos too, and I'm not trying to, brag here, but what we've talked about was this down here being the final target, 107.80. I've had this on my radar since the market was breaking down up here. So this was always my final target here on the move lower. And we got the bounce from here as expected. And what I said in Thursday's video, if you missed that, was if we look here at the 4-hour chart. So what I was talking about there is I was looking for a sweep, of these highs right back here. So we had NFP today. I was looking for a sweep into 109, a level I've had on my chart now for months, really. I was looking for a sweep into this level, sweep these highs, get the 109 retest. We had a high of 1.0906. So 6 pips above my target level here. And so far the market is down, big. And we're also potentially losing the 108.40 level here today. And again, this is why I've said over the past couple of weeks that I have not been interested in longing this market. I mean, even though this would have played out, well, buying from down here and targeting levels like this up here and even 109, even though that would have worked out well, just from what I've seen from the DXY, also the selling pressure we've had here throughout October, I was more interested in looking for shorts here on the euro into strength like 109. So really nice, move in here, really nice trade here from the EURUSD if you were able to catch this from the 109 area. So right now for the EURUSD, it is Friday. We do have about an hour left in today's session. So here's the deal. If the EURUSD closes today's candle on Friday below 1.084, so you can see these highs right back here, right? So if we get the daily close and weekly close back below this level here, then this up here becomes a failed breakout. And we get that move down here into this lower wick. Okay, so this is untapped so far. So in my opinion, areas like this down here, around 108, potentially just below that would become a target. Then of course you've got that trend line that we've talked about that is also going to be support. But this starts to look pretty bearish here for the euro if the market closes below 1.084. Now keep in mind that the DXY is still below 104.5, so factor that in as well. And if the EURUSD does close above this area, okay, so right around 1.084, then we could see a bounce early next week. Now, before we go any further, guys, I do want to mention that if you are looking for a broker you can trust, I've trusted these guys for 7 years. Check out the link in the description of this video and join Blueberry Markets. If you're on the website, scroll all the way down to the bottom of the page and click on that broker link. So with them, you can trade Forex, crypto, commodities, and indices. And for a limited time, you can get a 30% deposit bonus. Plus, if you deposit $1,000 or more, I will give you lifetime access to our VIP group. All right, so check out that link, guys, in the description of this video, or if you're on the website, again, scroll all the way down and click on that broker link. All right, so just wrapping up here for the euro, guys. Again, we've got a little bit of time left here in the day. So this will take a little bit more time to kind of unfold here to see what we get. Now, keep in mind, too, if we get the close below here, regardless of whether we close above or below this level, keep in mind that we do have a rather large candle body today. So it means that there's going to be an imbalance just above this area next week. So even if we get the close below here, we could see that move up here into this imbalance first before we get that rotation lower down here into this lower wick. All right, so next up we have the pound here, guys, which once again gave a short opportunity here from 130.50. So if you have seen recent videos, this is the range that I've talked about following the breakdown back here. So this right here, the retest up here, 130.50, the first one, this was a trade idea following that breakdown. And the target there was this imbalance back here, this candle that went untouched on the move up. And we got the retracement into that area here. And you can see where so far we are once again pressuring this key support area. All right, so you've got to be careful with this market just because it technically is holding on to support here as we head into the end of the week. So you can see that going all the way back here, we've got several highs in this area. So closing price right back here, we've got this high and also this price action through here. So you can see where the low right here on Thursday, in my opinion, this is the one that the pound needs to get below. And this could also be a little bit indicative, guys, of the euro as well. I don't like trading markets early in the week. So with regard to the EURUSD setup we just talked about, I would want to see, the first day or two, especially with the US presidential election coming up, guys, early next week. I mean, this is a case where, in my opinion, this up here early next week, so this range is really a no-go with that election coming up. If we get the breakdown below here, then you're looking at a new range with resistance coming in at 1.29 and support down here around 1.27. Okay, so, pretty clear if we get the breakdown. Obviously, if we were to get a bearish US dollar and the pound can climb up here, take out this level up here, close above it, then we're looking at this range. Okay. So really, again, going into early next week with the US presidential election, I don't love the idea of trading this market or really any market until we get some type of breakout, whether that breakout be higher or lower. Okay, so for now, this is your range here for the pound. But if the market does get below this region around 1.285, then we're looking at 1.27. If it can get above 1.3050, then we are looking at highs up here like this one up here around 3150, maybe just above. But with all of that said, given the look of things, given what the DXY is doing today on that rather bearish US jobs number, the fact that the US dollar is rallying, guys, tells me that the US dollar could want higher here over the coming days and weeks, but we're going to have to wait and see what we get from next week's US presidential election. So next up, we have the dollar yen here, which is holding above the area I've talked about all week. So if you saw those videos, what we were talking about here was the fact that the market managed to reclaim the 151 to 152 area. So going back here, you can see where we've got this trend line off of this low down here. This is an incredibly well-worn trend line that goes all the way back here to the start of 2022. And we also have several highs and lows in this area as well. So this right here, is, again, an incredibly significant area here for the dollar yen. And so far, we are seeing the market close above this on both the daily and weekly timeframes. So as long as that is the case, okay, this is not a short in my opinion. The only way, like I said before, the only way that this would have become a short is if the dollar yen had closed back down here, okay, back here within this range. If it had done that, then this right here becomes the short, but we didn't get that. Instead, the market is bouncing right there from key support. So in that case, what I've mentioned here over the past week or two is that as long as the market holds above this area down here, then this is a potential buy for a move back here toward levels like 155.60. Now, with this reclaim, if this holds up through the U.S. presidential election as well, and that's going to be key, obviously, because we are going to see a lot of movement from that event. If this holds up through that event, then in my opinion, we are looking at an eventual move up here toward these highs. Because a move like this, okay, a reclaim like this, a fake out like this significant, tends to produce an extended move in the opposite direction, or in this case, a continuation, right? So you get the reclaim up here. If this holds up, then this is a reclaim of a critical level. This down here is a fake out or a fake breakdown, and we get that move higher up toward levels like 160. So we'll have to wait and see how this plays out. Again, with the U.S. presidential election, if it does hold up though, then this is incredibly bullish for the dollar yen. But really, it comes down to whether or not the market can hold on to areas like 151. And last but certainly not least is the dollar CAD here, which we've talked about recently with regard to this channel that goes back to 2015. And also the fact that we've had 2 years now worth of consolidation below this area here, right around 1.39, 1.395. And this looks to be breaking out. Okay, so you can see a little rounded bottom here as well. We've also got a trend line off of these lows. Okay, so right now the market has pushed into this level, which you can see this is the bottom of the consolidation back here in 2020. And so far, it does look like we have a tentative breakout from this market. Now, what I've said recently is that if this can hold up, so let's take a look here on the weekly chart. If this can hold up, guys, I would expect this move higher to be incredibly aggressive. And the reason for that, okay, you can see resistance back here, which is starting to break down, all right, with this move here. If this can hold up through next week's events, then I think this is going to be incredibly aggressive toward levels like this area up here around 143 and potentially 147 over the coming weeks and months. And the reason for that is because we have seen several or couple of years here of consolidation below that level. So this has built up over a very long time. And typically, the longer the consolidation, the more aggressive the resulting breakout is. So you can see moves like this here from the dollar CAD, in recent years. I mean, you get moves like this back here, this one, this move up here, this rally. I mean, even drops like this. This can be a very aggressive pair once it gets moving. So again, I do think if this can hold on, right, I do think we are going to see an aggressive move higher into 143 and 147. Now, with all of that said, though, the grain of salt here, like I said at the beginning of this video and throughout, is going to be what we get from next week's U.S. presidential election. I keep saying it, but that is going to be a critical event that could, potentially trigger some fake outs. But again, guys, I mean, these have been trends that have been developing now for, a month. So this isn't a recent development. I mean, this is something we've seen building here over the past, 4 to 5 weeks. So right now, I mean, I'm looking at this area through here as key support. This is the one bulls have to hold right around 1.387. Keep in mind, though, following that event or during that event even, we could see the market actually dip below this and clear out any kind of early longs here, clear those out before the continuation. But the bottom line is that as long as 1.387, this area through here, can hold up for the dollar CAD on the higher time frames, then I do think we are going to get that push higher into levels like 1.43, which is a considerable distance away. I realize that. But when you look back here, though, that is really the most logical area for this market to go, simply because this was the range that built up back here in 2020. So these lows are the recent resistance. You've got range highs up here that become your target if 1.387 can hold. Now, obviously, if it can't, and next week we see the dollar CAD, okay, closing below this level. If it were to close below this level on the daily and weekly charts, then this up here becomes a fake out, and that would be bearish toward some of these lows and obviously some of these imbalances down here. But all things right now point to a higher USD We will see if next week's events confirm that. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join VIP link. I will see you on the inside. Trade well out there. Have a great weekend, and I'll talk to you again next week.